Good morning. Good morning, everybody, and welcome to the Morning Volatility Report. As I, Andrew Giovinazzi, Chief Operating Officer of OptionPit.com, welcome you to Option Pit today. A little different vol jump from the last move. Mark's saying, I like the market long vol as I think we could work over the next few days. You know, where you're looking at the movement, you had all the kind of crazy stuff going on with the euro is just all over the place this morning. There really wasn't any liquidity. We'll get to that in a second. But co-creator of the Option Pit store. You want to learn how to do stuff? Quick and easy place to do it. Okay? If you want to buy a couple of our classes at once, give us a call and we can make a package deal for you. Any gold member at Option Pit gets anything in the store for free. Okay, any gold member at Option Pit. Plus all kinds of other stuff. So you always call us to see if you want to package something in some creative way. Lots of our clients do the same thing. All right, and with that, let's get on to oops, I think I got muted. I forgot to do that. I'd like to look for trading here. We've seen this time and time again. The ECB does something that you think should drive the euro down. There's a ton of short interest in the euro, and everybody covers, right? Big funds, big macro funds, whatever, they do the massive covering. And up, up, up we go. Let's get a tick chart of this. This is kind of the story. Trading in euro stocks was pretty crazy. Again, no liquidity while everybody's kind of grasping for straws at what's going on. I certainly could add my 2 cents in saying, okay, Yellen got together with Draghi. I'm not going to do very much. You guys start raising rates, and I'm going to end my QE pretty soon. No prices for 3 to 4 minutes on the ES 50. Right? I think what's happening is the central bankers are looking at Japan, okay, saying, you know what, there's no more of this they can do. The world economy is not too bad. Unfortunately, governments have massive debts, which they're going to have to pay off, but there's not much else they're going to be able to do. I think so this could be the sign. We'll see, right? That's going to be the last vestige, at least short-term of volatility, all this other stuff. There was more liquidity in the Italian index. That's saying something. Okay. So here's our 5-day. So, the euro, making a big move, trades, and we have looked at trades like this, which we'll do today in the chat room, ways to kind of, the upside is still possible. There could be more squeeze, but it looks less likely, especially into the reality of the Fed rate cuts. So the euro's been, and the euro over time has been sliding, because of this reality. Don't forget, it was a lot higher not very long ago, right? This almost is inconceivable. It's dropped 20%, weighted to the, that's a huge move. Is this trend really going to stop because the QE wasn't that bad? It feels just kind of like a false start. It's just we've seen these time and time again. False starts. And until the dynamic changes, I don't see how that's going to change. Right? So you protect the upside in case you get, because it can just keep, right? Those are powerful forces once the funds go piling into a currency. So you need to have something on the upside. The good news is you're waiting till December 16th for some news. We might be able to sneak a time spread in, something else like that. I still think there's a story in the bank stocks for potential longs. It's one of those things where I don't know if being short gamma is going to be super great. However, we seem to be kind of in this range where how much upside do we have on just the fact that we're going to raise rates that we're expecting to raise anyway. So that's anybody's guess at this point. Right now, though, the market's pricing at about 1%, maybe a little more. Okay. But what we're not seeing happen, right? And I thought we would have seen this a little bit yesterday. Right? I thought we would have pulled back in vol just a little bit today. And we're not quite seeing that. Okay, we're not quite seeing that pullback. Okay, again, there's super short-term nervousness now around this number tomorrow. 23% is 1.5 point move. They're pricing the near the money straddle around $2 for one day. So we're expecting literally a 1% move either way. Right? So that is 207 or 211. That's what it's pricing. So that's kind of the fair number. Right? So anything you can find somehow to maybe sell outside of that could be interesting. But for right now, I think one of the reasons that we could sell off is just sort of what I had said before with Yellen maybe talking to Draghi. Of course, they're never going to tell anybody this conversation, but this will be the beginning of the end for G7 QE. Okay, you heard it here. From here, everything will be less. It will not be more. All right. But that could drive us around, and also it could give us extreme short-term vol. All right. And with that, I will see all of you in the chat room shortly. All right, everybody. Oh, and I almost forgot, we have a class this weekend on directional deltas. Basically, what this class is about is creating delta positions that don't have a lot of delta 1 exposure at the beginning, but create delta 1 exposure once you've got some directional roll, right? It's the ways of all the tricks of using gamma to give you less risk at the beginning, but potentially more reward at the end. All right? All right, everybody. And that is on Saturday. It's the only hint you get. Other than that, I will see you all. And if you're a gold member above, you get it for free. All right, everybody.